You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Wednesday, June 5th, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Wednesday. The first thing to know is stocks ride a wave of rate cut hopes. Global stocks moved higher on Wednesday, riding a wave of relief after Federal Reserve Chairman Jeremy Powell hinted that the Fed may loosen policy to support the economy. Powell promised to do what was appropriate in response to any trade-related impact on the economy. Investors interpreted the comment as an openness to cut rates, a dovish shift from a commitment to patience with regard to policy changes. The Dow soared more than 500 points on Tuesday, its second best session of the year, and U.S. futures pointed to a continuation of the rally on Wednesday. Investors will have further input from the Fed on Wednesday. Vice Chairman Richard Clarida will open a second day of a Chicago Fed conference ahead of several appearances from other policymakers. Elsewhere, Asian stocks were mostly higher following Wall Street, with Japan's Nikkei 225 ending 1.8% higher. China's Shanghai Composite, however, remained pressured by growth worries amid current trade tensions with the U.S. and closed down fractionally. European bourses also advanced. Growth worries remain front and center. The International Monetary Fund cut its forecast on Chinese growth this year to 6.2%. The decision that comes just 2 months after it raised its forecast to 6.3%. was based on escalating uncertainty surrounding the Sino-U.S. trade dispute. That comes on the heels of the World Bank on Tuesday downgrading its global growth forecast for 2019 to just 2.6% from an estimate of 2.9% in January. The Global Bank also cut its forecast for 2020 to 2.6% from 3.6%. The IMF will release its annual review of the U.S. economy on Thursday. Australia's economic growth hit a decade low last quarter, according to data released on Wednesday, under pressure from a weak housing market and reduced Chinese demand for commodities. The Australian Central Bank, typo, get a copy editor. The Australian Central Bank cut its benchmark rate to a record low on Tuesday. The third thing to know today is ISM Services PMI expected to hold at the 2017 low. Wednesday's focus on the U.S. economic calendar will be the Institute of Supply Management's reading of service sector activity for May at 10 a.m. Eastern. The ISM Manufacturing PMI is expected to remain unchanged at April's 55.5 its lowest reading since August of 2017. While the reading would still remain above 50, the dividing line between expansion and contraction, analysts see the fall from a 13-month high last September as a sign of weaker economic momentum. Overnight, China and Australia's services PMIs were weaker than expected, although the Eurozone beat expectations. The fourth thing to know is oil falls deeper into bear market territory with U.S. inventories on tap. Oil prices fell further into bear market territory on Wednesday after a surprise build in U.S. crude stockpiles. The American Petroleum Institute reported late Tuesday a build of 3.5 million barrels last week. Analysts expect the official government data at 10:30 a.m. Eastern will show a draw of 0.8 million barrels. U.S. crude futures lost 62 cents or 1.2% to $52.86 by 5:40 a.m. Eastern, while Brent oil traded down 58 cents or 0.9% to $61.39. Crude accumulated losses of more than 20% from April highs on Tuesday, the definition of a bear market, over fears that a slowing world economy will need less oil. The fifth thing to know is businesses prep amid Sino-US trade spat. Skyworks Solutions became the latest chip maker to suffer from the fallout of the escalating U.S. trade war with China, cutting its quarterly outlook after Tuesday's market close, citing the fact that it could no longer ship products to Huawei. On the other hand, Chinese companies are reportedly scrambling to solicit waivers on tariffs for U.S. goods that were imported. The Chinese Ministry of Finance has indicated it could grant some waivers on products such as beef, pork, soybeans, or coal. The moves by businesses come as China prepares plans to cut exports of rare earth elements, vital to much high-tech manufacturing. The U.S. Commerce Department promised to take unprecedented action to ensure that American companies won't be cut off from supply. Our second story today is from MarketWatch.com. ADP private sector job growth tumbles to a 9-year low in May. Private sector employers hired just 27,000 people in May, payroll processor ADP said on Wednesday. That badly missed the forecast of 175,000 jobs from economists surveyed by Econoday. Small businesses slashed 52,000 jobs in May, ADP said. Medium-sized firms added 11,000 and large companies added 68,000. Goods-producing industries shed 43,000 jobs, mostly concentrated in a 36,000 loss for construction, while the service sector added 71,000. The economy's weakening ADP architect Mark Zandi said on CNBC this morning, "This number overstates the case," he added. "It's important to note," Zandi used the exact same words last month in describing an upside surprise. "Growth is slowing, and it's slowing very sharply," Zandi added. Business capex is dead in the water. Our final story today is from CMEgroup.com. Farmer sentiment hits its lowest level in over 2 years. Ag producer sentiment dropped to its lowest level since October 2016, erasing all improvements recorded following the November 2016 election. The Purdue University CME Group Ag Economy Barometer, based on a mid-month survey of 400 agricultural producers across the U.S., declined 14 points in May to a reading of 101, down 115 in April. The decline in the barometer came about because producers' perspectives on both current and future economic conditions worsened considerably compared to a month earlier. The index of current conditions fell to a reading of 84, down from 99, and the index of future expectations fell to 108, down from 123. And that, ladies and gentlemen, is news you can use for today, June 5th, 2019, your Options News Rundown. I'm Dan Passarelli, Trade Smart, and have a great day.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.